Hi, this is Tracie Lowe, CPA, and I am going live. This is going to be like the CPA forum on Facebook Lives, and you just never know when I'm going to pop up. I'm going to be consistent and pop up at least on Sundays, Sundays at 8. All right, so welcome to the CPA forum and today's topic. I try to evolve these around business decisions and business goals, so I am able to see your comments. I'm on this app called like StreamYard, so this is going to be my first go around on here streaming live. And let me introduce myself. So, my name is Tracie Lowe, CPA, and I call myself your CPA because I believe my vision is to bring 1 million people to financial literacy. And to do that for free will be on Facebook Live, but I also am going to be able to work with me as a business coach if you would like. So today's topic is going to be around what is an IPO. An IPO is called an initial public offering. And guess what? Anybody can go into business and call themselves in business, and as long as we are properly structured. And what an IPO does, it brings investors to you for capital. Like, what is that website called? GoFundMe. It's like GoFundMe page. But the thing is, you are legitimized by actual accountants, CPAs going into your business and giving you assessment, a financial assessment. And they say, well, this company is structured properly, it's doing good, and we assess the value of their stock is going to be, let's say, $10 a share. And so what investors do is they go in on an IPO and they buy the stock in the hopes that it will appreciate in value. And of course, sometimes they depreciate. So let's take Apple. So Apple IPO, I don't have background statistics because I didn't do any homework for this, but I'm just talking. Gave an IPO. And in the IPO, investor says, well, I believe Apple is going to do amazing things when Apple first came out with Apple Computer. And then competition came into play. And so you have three forms of payment on an IPO. So let's say we invested in Apple and it was $10 a share. The IPO was issued and you buy as many shares for your $10. I'm just throwing out there what amounts could be because I didn't do any research. I'm just giving you an example. And so you invest, let's say $1,000, and you get that many shares, and then you get dividends. And so as the company is working, you would get dividends towards the amount of shares you had. So that's a form of investing where that is called a passive activity because you're not doing anything, you just invested and you're getting your dividend check. So your money is making money, probably more money than is in the bank. And that's one reason to invest. And then also, as the stock goes up on the IPO, you can sell your shares. Okay, so let's say the stock goes up to $20 and you decide to sell it. You have now made money, right? So the IPO is a form of initial public offering to put the market, those shares, onto the stock exchange. Now, some people invest in long term and short term, but those stocks are being acquired throughout the time. So I can see your comments. So if you have any questions, I'm here, Tracie Lowe CPA, to give you some questions. Now we're talking about IPOs, so let's keep it IPOs. I believe I can see them. So at least type something in there. If you can hear me, then just type in there. Yeah, got a question. Um, Also, let's say if you are wishing to sell and you're in exchange, that will be an investment that you would seek that will be taxable. So that's the IPO. Let me see. I have some questions coming in over here. Um, why is an IPO made? So the IPO is made to bring in cash money to the investor, to the company that is seeking for cash trade. That's why the IPO is made. Let's see what we have. Can an IPO be canceled? An IPO can be canceled before it hits a market. So yes, it can be canceled. An IPO can be canceled. I have another question. How to buy the share? So you have several different ways to buy shares. You can buy them through, now we have technology that allows you to buy shares. You can also buy them through what we call brokerage firms like T. Rowe Price or Merrill Lynch. That's how you can buy your shares. And then those companies make money by um, charging you an investment price. All right. All right. So that's an IPO. Let's see what else we want to talk about today. The question in the chat. Let's get some more questions. I'm looking at your questions around business. Let's do, what's a business startup? Okay, so a business startup is when a company, and you can incorporate yourself as far as a company, starts a business. So before we pursue income, there's some things that we need to understand for the business that we're going into, and that's called startup costs. So it could be like research and development, things that we do before we just open the doors or make our first buck is called startup cost. And those startup costs are tax deductible. Yep, tax deductible. Anything else we need to talk about? Well, I guess no, but this is be the first, the CPA Forum Sunday topic that I'm sharing with you on this first Sunday, the CPA Forum. I'm Tracie Lowe. I hope you enjoyed what an IPO is, why it's important, and most of all, an IPO is an exchange for an investment to hit the public for money for cash investors. I hope this was valuable to you. If you have other topics you want me to touch on to explain, feel free to DM me on IG or my Facebook page at Tracie Lowe CPA, TracieLowecPA.com. This is Tracie Lowe. Have a good Sunday. Love you for watching. God bless.